Alrighty, sup guys? Back for another video. I'm not good with the intro thing, but let's dig into kind of the market overview. My thoughts on the overall market and how boring it is right now. Because I bet everybody here is kind of just like wanting to trade, and I want to be trading. I want to put, yeah, exactly. Thanks for that piece, Stewie. I want to be putting my money to work and not having it just sit on the side. But I would rather not be losing money and just letting my portfolio plateau, and then when we get another market take off, and then we get that equity curve, right? So as you can see here, SPY just absolutely having a sell-off here. It's not as sharp as this 6-day sell-off, but it is pretty sharp. Pulled back to the 50-day and holding this 50-day really nicely. So I think what's really going to determine if the market is going to get another leg up or not is what's going to happen on Wednesday. If you guys don't know, that's the Fed rate hike decision. There's a lot of different things that are going to happen with that. Volatility is going to come into the market. And we could also see some money shift in and out of sectors, right? And that's what we got to be looking for those hot sectors as of right now. And right now, it's definitely not the sectors that are good for like swing trading and your fast moving sectors like your tech, your consumer services, your electronic sectors. All those growth names right now, they're not doing good, and I'm finding all the money's being shifted into more of the safer sectors. So just on the side of caution. For me, I'm still if I'm seeing something I will be taking the trade just on a very, very small size, and it's going to be mostly focused around small caps, because if we look at the IWM or the Russell 2000, this is doing way better than the overall market. As you see, it's holding a 10-day. It's above its 10-day, and it's basing out really nicely as the market is pulling back. So Stockby said this about a week ago, and he says he said in one of his tweets he would like to see an aggressive shift. There's going to be an aggressive shift towards small caps and mid cap names, and as we can see, we're seeing that right now. IWM's holding up while you have the big names like Nvidia. The Mag 7 is tanking with the market. So that's where I kind of want to focus my attention right now, is those smaller cap names. And yeah, that's just kind of my oversight on the market. So me and Dad were talking, and I kind of want to focus on the focus of this meeting is just EPs, because earnings season we're literally here. Like, we have this whole week, there's going to be a ton of different earnings come out, and there's tons of money in EPs, even if the market isn't performing relatively well. If there's a textbook EP, I highly recommend you taking it, because I find they perform a little bit differently towards the market, because they're so powerful, and it just instantly surprises the market. So an example like this, a really recent example of last earnings season, is EBS. EPS it's just a beautiful looking chart. I highly recommend you guys screenshot this, put it in a watch list, do something like that, because this thing has just been on a tear, and it just, yeah, EPs are, and even Chris Quilavagi said, like, he only really plays EPs anymore because they're so powerful, and breakouts, they fluctuate so much. Like, you need certain market conditions for breakouts to work. With EPs, and you catch a good EP, the market could be like trading sideways like we are now, a little pullback, but this thing's still ripping higher. As you can see, like, we get the market pullback around here, but look at this thing just still tearing forward. That's the power of an EP. So first thing we want to do is how do we look for these EPs? So I think I brought this up before, but what I do is I just go into this new tab here, and then I go into markets. If it will load, and then just down here, and I check this almost every morning. So it's just seeing the top stock gainers. Let's hope it load. There we go. So the top stock gainers, I look at after hours and pre-market. It won't show now because after hours and pre-market, they're not trading yet. So this is just what I look for, and then I go into a stock like this. Now, a recent example that I'm looking at for tomorrow is if we go into, hold on, I'm gonna have to pull it up here. Where is it? Sorry, I gotta have it marked out. This one, yeah, it is. Okay, let's go all the way back here. So if we look at IMNN, so IMNN, they gapped up around 100% pre-market. Is there a better example here? Let me see. There we go. So IMMM, they released the announcement on a phase 2 clinical trials. Now, what I like to do, basically what I like to do is I like to look at the gainer, see how much it gained, see the volume that came into it, and then I dig into, okay, what was the catalyst? And with them coming out with their top line results from a phase 2 ovulation 2 study, so they're pretty much just like helping. Yeah, they came out with a big drug that could potentially change the cancer space, and then yeah, I just see that that's pretty big news. And if I look at IMNN actually, because it doesn't show on TradingView, but yeah, they're up to 248, which is 108% move in the post market, and that's really, really good to see. And that's the first thing I look to. And then if we go into the hourly, you can see here just the sheer power from institutions coming in and buying the stock up, because this thing's traded over almost probably 1 million shares in these 3 hours in the post market. And that's almost, if we look at their average volume, that's almost 10x their average traded volume in the last 30 days. Very, very powerful coming into here, and I highly recommend IMM staying on your list. Now, there's 2 ways you can play this. So you can play it like a EP. So I'll break it down for you. There's 2 ways. You could play it on the 5-minute opening range break, or you could play it with a intraday trend break. Now, this is kind of getting a little into more of a complex strategy, more faster paced strategy. And if you're not comfortable with this, I highly recommend not trading it and just sticking with the daily time frame. But there are 2 ways to play this EP. So if we look at EBS, for example, I'm just gonna have to EBS. This is where you would want to play a 5-minute opening range break. So what I mean by a 5-minute opening range break, if I can, let me see if I can head back to, there we go. Okay. There we go. Okay. Where are you? Beauty. So this is what I mean by playing a 5-minute opening range break. So you have, where's the earnings right now? Oh, it didn't zoom back. Sorry guys, sorry about that. Okay, there we go. There's the earnings. So you have your earnings here, and you're just, like I explained in the video that I posted about EPs, you have your first candle here, and then you have what I mean by opening range break is you're watching this candle, it's forming a range, and then you're taking it on the next candle right when it crosses this 5-minute candle. That's the 5-minute opening range break, and you're just watching to see that this thing is within this candle's within its ADR or the range, and then you're seeing if there's volume coming in on this 5-minute candle to drive it higher. Now, the thing I like about taking 5-minute opening range breaks is I like taking them on CAT EPs. So that's earning guidances, earning surprises. Those are kind of where I like to play the opening range break, because they're so much more less volatile and predictable. They're not gonna like swing or have one random wick and stop you out. With dogs, on the other hand, they're way more volatile because they're a story stock. They're based on certain news that could happen or could not happen, right? So a good example of this is if we look at a recent example that's pretty hot in the chat was SERV. Now, if you played SERV here as an EP on the 5-minute opening range break, you would have been just fine. It would have not have stopped you out. But since it was a dog, I would definitely stay away from that, because there's a higher possibility you'd get stopped out. Like for this, you're literally 2 cents away from getting stopped out and missing this whole move. Instead, what I like to wait for is I like to see this stock prove itself, make a move up, and then form a little base here, like a trend breakout here. Let's see if I can do. Oh, okay, trend breakout here, and you see it's the same thing. Stock gets tight on volume, and then boom, breaks out right here on volume, and then makes another leg higher and goes for another.
Are you on the 5 minutes here?
Yeah.
Or what are you on?
This is on the 5-minute. So
okay.
Yeah, EPs, I like to look everything on the 5-minute, because it's just so much faster pace, because everybody's trying to get into the stock. Like everyone's piling in and trying to, like, you have big institutions, you got us recreational traders trying to get into the stock, and it's just, you can see how powerful it is, right? So it's just way faster. So if you're not comfortable with your trading yet and you're still learning the trend and base breakout, I highly recommend just sticking with that. I just wanted to show you, with earnings coming around the corner and a lot of different things starting to take off, like SERV and MIRA was another good example. What me and Dave look for in these, especially when we're playing EPs. And the big difference, the takeaway is, when it's an earnings surprise, like EBS, that's an opening range break we usually like to take. If it's a more of a news catalyst based stock or a biotech, then it's something we want to see it prove itself a little bit and then go, because you can have something like SERV that you would be okay on the 5-minute opening range break. But if you look at if I just flip through some of these examples here, let's see if I can find a good one for you guys. Yeah, so something like AEON, you would have been stopped out on this one on the 5-minute. Oh no, you wouldn't. Sorry. Let's see if I can find a good one. Yeah, so something like NUZE, you have this big gap up, and then if you play the 5-minute opening range break here, you very high chance you would have been stopped out here. So it's just something I like to wait for. And then you have something like NUZE, where it's starting to form a base, and let's see if it can consolidate here. So that's just something to keep in mind with playing EPs. It's way faster, but the return on it is way greater. Like I explained in the video, you'll have a lot more fails, but when you get that winner, it will outweigh all those fails, right? So with a crappy market, this is kind of the only thing I'm watching. And like Danny said in the chat, it's really the only thing he will be playing right now, because breakouts, it's tough for a breakout to really run when you have the SPY under a 21 day. And you have, like I was saying before the meeting, you have 3/4 of your watch list all red of the top 500 RS stocks in the market right now. So it's it's really, you got to pick your battles and kind of protect yourself and be safe out there. So is there any questions with overall EPs and like anything you want me to go over? Because I can go over some more examples if you want of just recent ones, or
define a dog and a non-dog.
a dog and a cat. So dogs, this is actually a stock B term. So a dog is basically anything to do with a news catalyst. So that could be like a spaceship. People are like a company's gonna launch a spaceship into space, or a biotech is coming out with a new drug that's gonna change like people's lives. Like it's gonna like help them lose weight or something like that. Just any news catalyst based stocks. And then a cat is anything with earnings, like earnings guidance. So like EBS, right? That this is earnings guidance, right? And big surprise to the market. Now, the big thing, the difference between a cat and a dog and what?
Kovey.
Pardon?
Kovey back in a minute. Canadian internet, what do you want?
Oh shoot, is my internet dying on us? Hello?
Can everybody else hear me, or?
Yes.
Okay.
Oh, no.
Make sure it wasn't me.
Yeah, I got you.
Make sure it wasn't me.
I was checking.
Wait, am I good now?
Yeah, you're back now.
Okay, sorry. I think my family's home, so they're just they're probably on the Wi-Fi. But anyways, sorry. Where did you lose me at?
I don't know.
Oh yeah.
Cat.
Okay,
Cat.
so
Cats are earning based.
yeah, cats are earnings based and dogs are news catalyst. Easy way to define it. And then what I mean by like dogs are more volatile is that it's all an outcome in the outcome in the future. Like no one knows what's going to happen in the future. Like the drug doesn't get FDA approved, or like the spaceship freaking crashes on the launch, then boom, like the stock tanks 50% overnight. With earnings, it's already set in stone. Like they already came out with the earnings, and now it's just off to the races, right? And it's way less volatile than something like that, right? So that's just kind of why you gotta pick your battles when it's coming to these EPs, and why I played the dogs a little differently than cats, because dogs, it's all future based. Cats, it's all set in stone. So good question though, Dan.
I have two more follow-up questions.
Go ahead, brother.
I also put today's tracker in the water cooler chat if you guys want to see where the sectors were at. Yeah, I put the tracker for the day.
Oh, beauty.
Yeah, water cooler chat's right next to the word water cooler. Little cartoon bubble.
Yeah, it's like the heat map almost. Thank you.
Yeah. So my question is twofold. First, I want to get you to show us how you measure that first candle. Do you measure from the wicks or from the handles?
Okay.
And then the final question to that is volume a consideration in this scenario?
Yeah, so with any sort of EP, volume, especially when you're looking at the start of an EP, volume is extremely important, because volume drives all stocks up. But if you look at can I zoom back to EPS here? Bear with me. I'm going all the way back because this is such a perfect setup. All right, beauty. Okay. So with something like EBS, is what you're taking off of this is, first thing you're doing is you're taking off and measuring. What I mean by measuring this is you're measuring the 80, is it within the ADR of the stock at the time. So if I could hit the replay and go into the daily, hopefully it pops up. Okay, beauty. So the ADR at the time was 10.88, right? And if we go on the 5 minute of the first candle of the earnings announcement, you can see the range here from the high. So that's, what is that? That's 305 to 282. So that's 7%. So that's within the daily ADR. That 5-minute candle is within that daily ADR. So I would consider that a really good range to enter the stock, because you're already within the ADR, and you're putting your risk here. Your risk is taken from here, and then your entry is here, and then your stop set here. So you're taking around an 8% risk on a 11 ADR stock, which is good. And then the next thing is this next candle, which was your other question. Your entry would be as soon as it clears this 305 area, right here, this candle.
So top of the wick.
Yeah, top of the wick.
Okay.
Opening range high break. You put on your trade, and then you set your stop at the low of this candle, and then you let the trade play out, and it's super easy. And you also do want to build this range, and then if you have volume come in on this 5-minute candle, that's also what you want to watch for, because you could have a really tight candle here, but then you get a break and you see like almost no volume coming in. Very high chance that's going to turn around and fail on you. So you got to remember, opening range break within the ADR, and needs to have volume on that second candle. That makes sense.
On the second candle as well.
Yeah.
Okay.
Yeah.
Right.
Yeah. There needs to be, if you're using the Marcus Smith indicator, there needs to be above average volume, probably within the first like 15 to 30 minutes of every candle, if you're taking an open range break. Because if we go, you can just see, right? The first like 30 minutes into the market is just volume. People piling into the stock, trying to either buying or selling it. And just, So this is exactly what you're looking for when trading an EP. Any other questions with EPs, entries? Any other questions other than that? No, I'm just kidding.
Yeah, that's what I'm going to say here. You guys I hate you guys. You make me look like the idiot that doesn't know anything. It's like, let Dan answer all the questions there. I asked all the questions.
I love the questions, bro. Keeps me on my toes. No other questions? Oh. All right. So I guess that's kind of EPs in a nutshell. And I'm hoping this next week, I think I said this last week, but I'm hoping this week there'll be some earning guidance EPs or CATs, because to be honest, I feel a lot better playing those than I do playing something like a SERV or an MIRA, just because of how volatile they are. Because like if you're playing something like a MIRA, you are you're not holding this overnight. With something like EBS, you're holding that overnight. It's more of a swing trade. MIRA is more of a day trade, just because it made such a powerful move, and it's a pharmaceutical. It's bound to pull back, right? But yeah, that's kind of EPs. So, or how I'm gonna go into this earnings season playing EPs. But you guys good?
I'm gonna put the video. I'm gonna put the video for your deeper dive on this subject in the chat in a hot second.
Yeah. Jolene, you had your mic on.
Where's the best place to get the news on the earnings?
Okay, so with
Estes, most reliable.
Most reliable, I use Yahoo Finance. It's that's kind of your go-to automatic news place, to look for news, and I find it's very, very good at getting all the news. But my main thing I do use TradingView. So to answer your question, the main one I use is TradingView. I just click on the stock here, like I go into here, and then it says news here, and it has a bunch of different news titles from like Bazinga, empty news wires, stuff like that, right? And then if I can't find it here, like for example, IMNN, I couldn't find the news here. Oh, it just came out here, but I couldn't find the news there for a second, so I went to Yahoo Finance, and they had it right here, right posted right away. So I just bounce between these two, and it's completely up to you what you want to use. If you can't find news on TradingView, it's most likely on Yahoo Finance. So I'd use the TradingView, and then I'd go to Yahoo Finance. Just kind of keep everything on one platform and make it easy for you guys. So good question though, love it.
Yahoo Finance is completely free.
Yeah,
it's such a great resource.
Yeah, yes it is. I use it almost every day.
Hey, Kovey.
Yes, sir.
Also, if you hit that little lightning bolt there, down there by next to the earnings, right underneath the chart.
Which one?
On the chart.
That's a hit.
Oh, this one? Bolt. Oh, yeah. Oh, shit.
That's
nice.
what I usually hit.
Yeah, that's perfect. That's exactly what you need to hit. Beauty. I didn't even know. Oh, I shouldn't. I completely forgot about that. Actually, I didn't even know that thing existed, but thanks for that, Beast.
Now, if you don't have that on your chart, that means it's been turned off. You just need to get it turned back on again.
Yeah. I forget how you do that. I think it's in your app settings. And then if you go into alert, maybe? No. Anyways, you guys will figure it out. All right, so
if he has trouble with that, don't see it, I'll work with you and we'll figure it out, because I've seen it before. I just don't remember offhand.
Yeah. Beauty. Well, thanks for that. Thanks for that, Beast and Jolene. So then we go into KOS. So, sorry. I'm going to go into the watch list here. This is kind of just what I'm watching. Like I said, I'm really dialing back my risk here because, yeah, breakouts, they're just not working right now, personally for me, or there's not a lot of stuff setting up, as you can all tell. But the thing I want to mention is, the first thing I want to look at here is KOSS. I think you guys remember KOSS. Now, it doesn't have a really nice trend that you can draw, and that's why I'm kind of skeptical of it. Like me and Dave were kind of going back at it. We're like, no trend, and then I was like, well, but it's super tight. Like, you see this, this is incredibly tight for what ADR it's at. It's at a 29 ADR, and if we took it to the low of this day, that's 5%. So you have a 30. This thing moves 30% on average in a day, but you're risking 5%. So you can literally, if this thing wants to pop tomorrow on volume, you can literally be making 30% on 5% risk. So that's like, what is that, 6R? That'd be like 6R in a day. So keep your eyes out for KOSS. You got to be careful though, especially because it's not a nice trend like your NNE or your REBN or your RGS, just because of this huge gap up, gap up on news, and then it came back down kind of hard. But it is finding support, building higher lows on that 10-day too. So it is one of my top watches just because of how tight it is and the way it's setting up. But you also got to remember the main area resistance that it's probably going to run into is this anchor VWAP level at 12.13 if you take it tomorrow. So I would definitely, if you're going to get into this, sell half at this 12, or set a sell limit order at this 12.15 area or something like that, because that'd be the next area of resistance. But yeah, KOSS, keep that on your watch list. I'll be probably, if it breaks out on volume, I'll be playing that tomorrow. AP, So this is a shit stock, like absolutely shit stock. I did take a trade on it today, which I really regret doing because I did get stopped out of it. And it was just the thing that kind of went through my mind was like I haven't traded for about a week to 2 weeks, and I was like, okay, this thing broke out previous day high, but it didn't have any volume. Like it came out, touched like this previous day high, my alert. I was like, okay, I haven't put a trade on. The first thought that went through my mind was like, I didn't have a trade on in the last 2 weeks. Like I wasn't trading at all. And I was like, okay, I might as well put a trade on. And then, then I get stopped out same day. So that was kind of a little bit of a wake up call. Be like, it wasn't a perfect setup. First of all, you're trading an RS, a stock that has an RS rating of 7. And yes, it had this move up. Yes, it's looking very, very pretty. But with you having this RS rating so low, you're definitely stacking the odds against you of this trade actually succeeding. Yes, you'll get one runner like a ZAPP, which is you'll see once every like quarter where it gaps up here under the 200-day and then just goes on a huge run here. But with something like AP, it's kind of the same thing. You gap up and then you have a base here. Now, yeah, I just threw this on here because it's looking really tight, and I wanted to bring up just my mental state on taking this trade and being like, kind of like what an idiot I am for taking not a textbook trade. Like there was no volume coming into this whatsoever. It literally just ticked above this 168 level, and I was like, okay, I'm getting in it. So AP, I'm still watching it. I want to see what happens with it. It's super tight, but just be careful of this RS. I highly recommend not actually putting this on your watch list. I just want to see if this thing will get some legs. So AUR, this thing did break this trend today, and I don't know if this was on volume. I think it was on volume. In the chat, where was it? 7 o'clock. Monday. Yeah, I think it's right here. Yeah, it was. So yeah, this definitely could have been an entry right here, but I didn't. Like I said, I didn't take it because first of all, I was in AP, and then market's under the 21 days. So you got to be very selective about if you're trading at all, and I would only recommend taking your five star setups or not trading at all. Like I'm telling you, AP was kind of a wake up call. Stuff breakouts aren't working, and it's definitely a time not to be trading or trading on very little risk. Like when I mean little risk, I mean probably a quarter or an eighth of your full position, and that's what I did on AP. I took like a quarter risk, so it didn't hurt me that bad at all. So we're just waiting for it right now. So then we have HYLN. Beautiful. This is actually setting up really, really nicely here. You got this big move up on volume, setting up really nice sideways. Now it's getting really, really tight here, riding this 10-day moving average. And if it can get tight, if it can have 2 more days, that would be really nice. And we're starting to get this volume dry up here. So I'm hoping for 2 more days. 2 more days, I'll be very, very happy with HYLN. Now, the sucky thing about this season is a lot of these good setups are going to get spoiled by earnings. And as you can see here, if this takes 2 more days to trade up, you have about less than a week before earnings. And like I don't hold anything into earnings unless I have a buffer. And earnings, it spoils everything, and it's a gamble if you're holding into earnings because you have no idea what it's going to do. Like this thing could just tank, right? So just be careful when you're playing stuff in earnings. I think AUR, literally has earnings tomorrow. Literally has earnings on Wednesday after market. So don't watch this. Actually, I would.
That's why I didn't take it today.
Yeah, don't. I would. Yeah. Yeah, that was actually the other reason I didn't take this was the earnings on Wednesday. It just doesn't have enough time to get enough of a buffer where I feel comfortable holding it into earnings. But go ahead, Dan. You said something. Were you gonna say something?
That's why I didn't take it today.
Yeah, that was a good
One
move.
because of the market, I was already cautious.
Yeah.
And I was still thinking about it. Then I saw earnings. I was like, now it's just good.
Yep. Yeah. And a lot of these names are going to have earnings. Like, for example, EVGO, another one, big move up. Now you're finding support on the 10-day, getting tight, getting tighter, and then you have earnings right here. So it's a lot of these names are going to get spoiled by earnings, which brings a tear to my eye, but that's how the market cycle works. So just keep watching that. Huma kind of got sloppy here after this fake breakout and then came back in. And this is why I just also don't like to see these fake breakouts like this. Like, this thing broke out on volume and then it came just slammed right back in. And that can also be a sign that stuff in the market is just not working out and you should really be dialing back. So it's also watching how the stocks you are taking are performing. So the next one, the other one I considered taking today was LB. LB, I've been kind of stalking this one just because it's a new IPO and then it ran up. It ran up and now I got formed a base on this 10-day and it got tight here. And then had a shakeout, touched this 10-day, came right back, and then around 12 o'clock today on volume, it pushed higher and had a really nice breakout. It was a late day breakout, which I don't like to see. I like to see stuff break out early in the morning so it has a whole day to run, but this thing had a really nice late day push. And I'll show you the 5-minute where I would have took it, because it was breaking out of its previous day high right here, and it was breaking out of this where it's open price, which it went from red to green, which Danny kind of explained to me that's usually a bullish sign. So we have, and this would have been the candle to take it on right here, and you can see the volume did come in on this 5-minute candle, and then it just continued to rip higher and higher, and volume throughout the day came into this. So LB would have been definitely not a 5-star, but I would consider it more of a 4-star trade. But yeah, instead of taking a 4-star trade, I took I'd probably consider it like a 2-star trade. So yeah, it's just something for me to figure out and adjust to. So yeah, LB, I'm just watching that to see how it performs tomorrow. QURE, this one holding its 10-day, broke down here though, so we'll see how it does tomorrow. I have BLDN. I've had this one on my watch list forever. It's just like, it's one of those stocks that just can't get across a certain price area, and you just want to watch and see if it forms tight at this major area of resistance. And if it gets tight around this area, then I'll probably consider taking something like this, just because it just, over the course of, how long ago was that, like September 2022 till now, it just literally can't get across this $3.30 area. So just watching that, see what it can do. RVMD, nice. This one's holding up really well in this market pullback. Nice run up here, and then it's pulling back. This is a health technology, and health technology is doing really good relatively towards the market. So just something to watch here. It isn't really forming a higher low. It's kind of more of a flag, but this does look really nice. So, but you also got to watch out. Like I said, earnings is on Tuesday the 6th. But yeah, watch out. Just watch out for those earnings, right? That is ZAPP. So ZAPP holding this 21-day and forming higher lows really nicely, but it just looks sloppy. So I just have it on here to watch and see what it can do. But yeah, chart looks sloppy right now. So, and then SHIM. So SHIM, I'm just watching this because of this big push up on volume, and I want to see if it can get tight here. Yes, the RS rating is 12, but it is a newer IPO. So, and it just sold off right away, but now It's traded its most volume like ever in these last 2 or 3 days. So I just want to watch and see if this thing can tighten up and get some legs. MDWD, so this one holding the 21-day really well. Again, just kind of just sloppy, like nothing, no beautiful looking trend or anything like that. I'm just waiting to see if this thing gets really, really tight, and then probably make a trade on it. CDNA holding up really well compared to the overall market. Now we do have the earnings on Wednesday, so gotta watch out for that. Just watching how that does with the earnings. RGS, so this is definitely one you probably want to watch just because of how freaking fast it moves. Now it does need to get tight. It does need to build out a little bit more, but this is looking really, really good. And it's a health technology, so it's in a hot sector, and it just had a huge move off its bottom here and crossed through all its moving averages. So RGC, watch that. TNGX, I threw this one on here, but it's just sloppy. This doesn't look great. You could see it's starting to tighten up, but nothing beautiful. Even if you go back here, like it just looks disgusting. IMNN, you know, I'm watching this. It had a huge gap up on a crazy amount of volume. If I can go to the extended, just that volume that came in here, it just traded its 10 times its average daily volume in the last 30 days, which is amazing to see. So definitely very powerful that this is coming in. Something to watch. And then this one, ISPO, this one also had a gap up by, I don't know how much. Let me just get it for you guys. ISPO, 31%, gap up after a big move from its bottom today too. So yeah, that's just kind of my watch list. Not a lot of breakouts. A lot of my focus is also going to be what Danny said, like EPs and just trading those. But anyways, that's kind of everything I wanted to go over. Is there any questions, comments? Did I confuse anybody? Because I did kind of speak fast and my words do get jumbled a little bit, but it's the thick Canadian accent. That's what it is. But
if you'd like to know more about Kovey and the EPs, I did put his video that he goes in depth into the water cooler chat.
Yes. If there's no more questions, guys, we are finished, and we could just chillax, chat, talk about how boring it is right now as a trader. I mean, it's not boring, but I mean, trading is boring, to be honest. Like it is, especially swing trading. Like you got to be prepared to sit on your hands for when the market's not good or the stocks you're watching aren't good for months on end. Until you see those better improvements, and then when you see those improvements, you start taking more risk. So right now it's a quarter risk for me, and then as soon as I start seeing stuff working out, then I start scaling up, and I'll scale up fast. And that's what Mark Minervini does. He when the market's in the downslope like it is now, he doesn't trade, or he takes very little positions, and then when stuff starts working for him, he'll start to size up and take bigger risk. Like he'll size up really quick. So, yeah. But if you guys don't have anything, I'll stop the recording, and then I'll just be in here for another like 13 minutes, and then chilling, and then yeah. All right, guys. I think this concludes the Discord meeting, and perfect. Thanks for tagging along.